Hello, everybody. Welcome to an October 15th edition of This Week in Crypto. I'm your host, Brian, alongside my co-host here, Dino. We're going to talk about what's happened over the past week in terms of fundamental metrics, on-chain and social. We'll be going over whale activity, of course, and touching on a lot of other usual metrics that you guys have seen us discuss in previous videos. If it's your first time, we just want to remind you that what we do here is not investment advice. We're not going to be suggesting what you long or short or shift your portfolios in any which way in terms of its allocation. So note that what we're showing here is based on historical evidence and educated likelihoods of things occurring from our metric standpoint here. So Dino, what we've seen so far is obviously a pretty good past week. Bitcoin has literally just in the past 10 minutes, right before this call started, broken 60K officially on many exchanges. I know it did a little earlier on CoinGecko, but now we can officially say we are, at least as of a minute ago when I checked the charts, above 60K for Bitcoin for the first time since April. And Ethereum is well above 3,800, appears to be approaching that 4K mark. Who knows whether it'll be there? We'll look at a few bullish and bearish divergences for that. But let me know what you've been seeing yourself.
Yeah, I mean, it's the October, right? It's been, in terms of Bitcoin, I think we have been relatively bullish in terms of its fundamentals for the last couple of weeks. Brian, both you and I have been harping on daily active addresses and circulation and your NVT model. Last week, I think it was the first time in quite a while that it was actually showing semi-bullish signs, suggesting that compared to its price, even though the price of Bitcoin was rising, the total value transfer on the network was starting to look healthy. So I wrote an article on Monday saying that I was still a little bit concerned. There were some social markers of retail euphoria. Bitcoin's sentiment on Monday has basically skyrocketed to, I think, like a 30 or 40-day high. Social dominance and social volume, pretty much everything sort of started rising in the same vein in maybe like 12 hours, in a 12-hour span. So on Monday, I was relatively skittish. I even said that until these metrics sort of stabilize, I'm not sure that we'll be able to break 60K. Luckily, some of these metrics have stabilized over the past couple of days. In particular, social sentiment for Bitcoin seems to be now slowing down a little bit in terms of the average bias towards BTC. According to our data, it is currently sort of neutral rather than mega bullish, which it was at the start of the week. So it seems like as we're approaching the 60K mark, more and more people might be scared. So that keeps me optimistic that this rally can continue. There are some positives, but there are also some yellow flags. And I think we need to sort of be transparent and talk about all of them and let the people make their own decisions based on data. But you've already got the NVT open there. Yeah. So let's start with that, and then we can go metric by metric.
Absolutely. Yeah, let's touch on this NVT model here really quick and look at where we are now. For those who are unfamiliar, we have a 5-colored spread here indicating any given month it would be ranging between bearish all the way up to bullish. The colors should be pretty intuitive, red and orange being bearish, yellow, green, and green being bullish. We're in yellow-green territory, showing us that we are actually getting slightly better amounts of circulation compared to what our current market cap for Bitcoin is dictating. This shows that after 7 months of bearishness, we have returned to semi-bullishness all of a sudden. This is not typical. Sometimes it's, or I'd say most of the time, it's much more of a gradual turn back from bearish, over to neutral, over to bullish again. But we went from 7 straight months of bearishness. All of a sudden, we're back in semi bullishness, and with that, you can see this white line here indicating the average price. It's essentially skyrocketed because the circulation just turned around pretty much right at the end of September and early October. And when we see green, historically, you can see what happens to the price here, even back here, and here when we were full on in bullish mode. So this is looking pretty good. The last few days continue to look good. These tiny little hash marks here are indicating what each individual previous recent day is doing, and they're actually below the average month, which is good. Lower is better on this chart. Briefly on Ethereum, and then we'll go back to all the on-chain stuff we see for Bitcoin first. Ethereum is not looking as good. The last couple days have. These two little hash marks here, well under the average month, shows that circulation has been picking up, but it's still actually semi-bearish, which is interesting because they were kind of flip-flopped with Bitcoin for most of this year, even going back to midway of last year. Tons of bullishness, while Bitcoin was kind of semi-bullish for a while and then bearish here, with Ethereum being bullish. So that's flip-flopped. They're now not getting as much circulation while Bitcoin is. But we'll touch on more metrics for both. This is just one indicator, of course, that gives us a snapshot of just how many unique tokens are actually moving on the network for any given month. So this is a nice macro look.
Yeah, and it should be, I think, noted, Brian, both for Bitcoin and Ethereum, last week hasn't been stellar in terms of just basic network-wide metrics. Daily active addresses and circulation has dipped compared to a week prior. So yeah, we're still in a relatively strong environment as far as Bitcoin related value creation on a daily basis. However, I mean, I don't want this, if I'm bullish on Bitcoin, I don't want this trend to continue where we see this potential bearish divergence between Bitcoin's price and the total amount of activity on the network. Like I say in most of my weekly reports, generally speaking, although there's no silver bullets, historically actually speaking, sustained price rallies often go hand in hand with continuous uptick in on-chain activity. Just these metrics we use as a proxy for the amount of demand and potential buy-side pressure for a coin. So the fact that both circulation and daily active addresses have kind of slumped over the last week might be a little bit of a concern. We're still above, like, I use this fairly arbitrary milestone of 1 million daily active addresses to see whether Bitcoin is doing well or not. It has stayed above that level for the last couple of days, but last week we peaked at 1.14 million daily active addresses. That was massive. That was one of the most sort of traffic-heavy days on Bitcoin's network since May. It was very, very good, very strong. Last couple of days, not so strong. I think daily active addresses, now that we've broken 60K, especially if we even try to tease 61K, I think daily active addresses might start to explode again. So it's still not a massive concern for me, but it's something to keep in mind that we are seeing slowly sort of a divergence between the price and on-chain activity for Bitcoin. For Ethereum, it's even more pronounced, but I think it's got to be connected with the fees. The average fees on Ethereum have I think pumped to $40 yesterday. It was one of the biggest days in terms of the average transaction fee or the average fee or cost to interact with the Ethereum network. So it's no surprise that Ethereum's daily active addresses are struggling to keep trend with the Ethereum's price. I mean, Gary wrote an article a couple of days ago on Litecoin, which doesn't seem to have any problems soaring in terms of on-chain activity. In fact, you know, the last couple of days, Litecoin, for the first time in quite a while, maybe even ever, has flippant Ethereum in terms of just general daily active addresses. So there are like 600,000 daily addresses now utilizing Litecoin, LTC, believe it or not, compared to just about below 500K for Ethereum. So ETH is definitely in struggle mode just in terms of network activity. I think obviously it's not the only metric to keep in mind. I think a lot of it has moved to L2. There are, you know, additional explanations instead of just saying, oh, well, Ethereum is struggling to keep up. But, you know, it's a relatively concerning marker. It's not the only one to keep an eye on, but it is what it is. Now, while we're talking about addresses, Brian, I thought might be a good time to talk about the big ones, right? So I think we've been talking about whales for Bitcoin specifically for the last month. We were waiting for them to do something, you know, that meme with a guy with a stick and saying, you know, do something. This is what we were trying to do with Bitcoin's whales. They have, this is the chart that we usually search or sort of analyze when it comes to what are large Bitcoin addresses doing. So for those that are not familiar with this metric, what it does is it calculates or tracks the total amount of Bitcoin that is held by addresses between 100 and 10,000 Bitcoin. It's quite a range, but these are all millionaire addresses based on Bitcoin's current price. And we sort of exclude addresses that have more than 10,000 Bitcoin because, first of all, there's less than 100 of those, and second of all, they are more likely dominated by exchange addresses. So we're really trying to harp in on what's the overall sentiment of whales, of actual like institutional traders and large Bitcoin wallets. Are they showing signs of confidence in Bitcoin's price action? And so the last month or so, the total holdings of Bitcoin whales have been fairly flat. Like you see, there was this spike on September 26th, but that spike's a bit misleading because it turned out that was an internal Huobi transfer, so it's not as bullish as it might seem. So if you sort of flatten that spike out, the last month of data has been relatively, uneventful. Bitcoin's total holdings or total holdings of these wallets have hovered at around 9.29 million for 30 days, even though Bitcoin's prices started to pick up. So finally, the last couple of days, we are seeing some signs of like a vote of on-chain confidence from these addresses, where they are once again starting to accumulate some BTC. It's not massive amounts. I think it's the last couple of days, last 3 days, it was about 20,000 BTC. Still, I mean, I say, a small amount. It's still millions of dollars. However, it's something to keep an eye on. So this, I believe, might be one of the reasons why we are finally able to have a more sustainable uptick in Bitcoin's price action, is that we are, after a month of just complete lull, starting to see some signs of renewed interest and renewed confidence in Bitcoin's price action by whales. So yeah, just wanted to talk, like, while we're talking about the general network addresses, I think it's important to talk about this specific stakeholder and how they're reacting to market action.
Yeah, nothing really to add besides what Dino said on these whales. This anomaly here is something that we kind of are looking at as a nullified event. So we're pretending like this never happened and we never went from 48.86 all the way to 49.22% held. But even with that, right, if we highlight here, we can see that there's been an uptick of about 0.2% in terms of what this 100 to 10,000 addressed here is now holding. So it's something, and it's certainly not moving down, which is good news. So to say that this price justified, it's debatable, but it certainly isn't being counter traded by these whales. So good news there. Why don't we touch on a few more metrics such as funding rate? Dino and I were talking about this before the call. Bitcoin is seeing an uptick here. For those who aren't familiar with something like the Binance funding rate, what this is measuring is essentially when longs are exceeding shorts by a wide amount, or when shorts are exceeding longs by a wide amount. You'll see these upticks indicating that longs are becoming excessive. You'll see these downticks indicating shorts are becoming excessive. Generally, when you see these big, tall spikes in longs, that's a sign that we're getting top-ish. You can see here the funding rate of Bitcoin was at 0.098% or so here, right before the fall back in mid-May. We saw another one at about 0.057% in early September, right before the correction. And now, just as of the last 8 hours, we get this data coming in from Binance every 8 hours. We're sitting at 0.0367%. So it's not the same historical danger zone where corrections occur, but certainly whenever we get high, it indicates there's an increased risk of a correction at the very least. Whereas right here, if you were watching it in late September, this was an indicative of an increased, or I'd say decreased risk and increased logical implied buy opportunity, at least based on history, right? We can see even larger down spikes here that occurred when there were some pretty ripe buy opportunities. So this is for Bitcoin. And then we even have a view where you can see the top 10 altogether. Yes, right chart. So this is showing the combined Binance funding rates of the top 10 projects. I'm going to take out Tether just because I don't think it's relevant to the discussion. Actually, that wasn't Tether, excuse me. We'll just leave it out. That was Ethereum, but it's essentially doing the same as the rest of these top 10 projects. When you see this group here, all kind of turning negative or turning positive, excuse me, that's a sign that people are becoming euphoric. They're trying to really take advantage of this upswing in price and leveraging their trades to 5x, 10x, whatever, because they feel so confident that it's going to go up, that they're going to put extra money on the line. And that, of course, that kind of greed that is indicative of that moment is usually what correlates with corrections, just like we saw the opposite here that I just showed on the last screen for just Bitcoin. But seeing it in a group setting like this, I think is really interesting. Go ahead, Dino.
I think we're now moving into potential yellow flags for Bitcoin at 60K. So Brian hit the nail on the head. Binance is leading the charge in terms of funding rates. OKX is also slightly up in the last, I think, 3 hours. FTX as well. A few other like high volume exchanges, Huobi and BitMEX, are staying flat at the time of the recording of this video. So it's not like a market-wide consensus that Bitcoin is, that people are going long. But yeah, generally speaking, what this spike in funding rates points to is longs are becoming emboldened. And historically speaking, when longs were dominating the market, this was the time that we hit several local tops, price tops for Bitcoin, not just in 2021, but back in 2020 as well. So we're not at those levels, but this is to be expected. When we see price rallies at some point in time, we are going to see people becoming a little bit over leveraged because it is crypto at the end of the day, and people are going to go degen at some point, degen mode at some point. So keep an eye on these. It's very early. Bitcoin just broke, I think, 60K for the first time in like maybe 30 to 60 minutes ago. So it's very fresh data. We'll just have to keep an eye on it. But it's not the only data point, Brian, that is sort of suggesting that we might be, seeing some renewed confidence by retail investors, which usually we're not very fond of. So I think one thing that you can show maybe is if you go to wrapped BTC as a coin and you search for DAI created. This is a metric that our founder likes a lot. So it's a metric that essentially tracks the amount of DAI minted by depositing wrapped BTC as collateral in MakerDAO CDPs. What that essentially means is, if you're not really familiar how that works, you put wrapped BTC in a MakerDAO system and you get DAI back. Or you can also put wrapped ETH, a bunch of different collaterals. So what we're seeing in terms of DAI created in particular, let's see, I don't think that's DAI repaid. Can we just have DAI created shown? Yeah, we can cancel all of those out. It doesn't really matter.
Okay, I'll take them off.
Yeah.
Let's go created.
There we go. So last couple of days, has seen a pretty significant uptick, sort of a cluster of spikes in DAI created. It's the same thing, by the way. If you go to wrapped ETH, you will see the essentially the same thing. So both wrapped BTC and wrapped ETH are being used more heavily as collateral to mint DAI. So this could be, or has been sometimes in the past, sort of a sign, an on-chain signal that people are looking to go risk off. And sort of move back into the market, because you can go like double long on Bitcoin with this approach, right? You can put wrapped BTC in MakerDAO, take out DAI, and then buy more BTC with that DAI, or you can long it on DYDX or whatever. So historically speaking, this has sometimes been a sign that there might be an uptick in just network, sort of a retail level confidence in the performance of the entire crypto market. So another sort of sign that we might be looking at a little bit of euphoria. The last sign that we are indeed sort of moving to a euphoric state is Bitcoin social dominance. If you look at it in a sort of a 6-month environment, Bitcoin social dominance has started to pick up again. It's not massive, but it's now at about 30%. A couple of weeks ago, it was at like 17% or something. So as Bitcoin breaks 60K, I expect this to even pump or sort of spike to 35, 40%. I expect Bitcoin to become the leading market narrative. And when that happens, that usually coincides with a lot of retail euphoria. So all of those factors combined might suggest that we are looking into sort of moving into a slightly overvalued territory. I don't think we're sort of there yet, but these would be the signs that I am looking out for. High funding rates, on-chain signs of market euphoria, such as DAI created in MakerDAO CDPs, and our social data, so social dominance, social volume, and social sentiment. Now, last thing that I will say about this, since we're already talking about social metrics, Brian, is at least on my end, when I look at graphs.sentiment.net/social and I look at Bitcoin social sentiment specifically on a 12-hour interval, it's still not spiking. It's still not super bullish. So I wrote about Bitcoin sentiment on Monday when it was at around 57K. And I basically said, look, and Brian is going to show it right now. I said, we are seeing one of the biggest spikes in Bitcoin sentiment in quite a while. This might be a sign that we're going to, not be able to immediately break new ground. And we did correct to, I think, 54K at the middle of this week, right there. There we go. And so now I am sort of glued to this chart. For the moment, for the time being, according to our data, which we collect from over 1,500 cryptocurrency related channels, social media channels, average sentiment towards Bitcoin is still not super high. Actually, since this mini correction to below 55K, the average sentiment has actually flattened out. It's moved back to neutral. What happens next is, I think, a big question. So for me, the moment at which I would be fairly concerned for Bitcoin is funding rates become very high, social dominance becomes very high, and social sentiment becomes very high, and MVRV becomes very high. So those would be like the four maybe charts that I would be keeping an eye on. Just putting it simply, Brian.
Yeah, as Dino said, we saw a very large spike. This was the largest spike in euphoria for weighted social sentiment measurements since mid-May. And with that, not much really happened. We had that very small correction down to 54, and then we took off as people were beginning to kind of neutralize here. And we're sitting back at neutral territory as we speak right now. Certainly no indication of fear, but this at least shows that at the 60K mark, people are not yet euphoric. We'll have to see when the next 12-hour data point comes in, how people are reacting to this, of course. But at least for now, we're not seeing anything indicative of major FOMO, newbies in the market jumping in and trying to really take advantage of this market. We do see it, of course, on Binance funding rate and those wrapped Bitcoin and wrapped ETH metrics that we just looked at. But this tends to be a really nice indicator when people are getting euphoric for a sustained amount of time, like we saw, I don't know, kind of right here a little bit and right here as the markets were dropping. People that are just stubborn and wanting to buy the dips, knowing that the price is going to go up, which leads to the price not going up. It's very interesting to see how this kind of chart dictates future price action. But at least for now, no danger.
So, Brian, I think let's just address a few questions in chat before we continue. Number one, Joshua is asking, where can we find this data? So, Joshua, if you're referring to weighted social sentiment in particular, you can find it, and I'll share it in chat as well, on graphs.sentiment.net/social. So keep in mind that we also have social sentiment metrics on Sandbase, right? Our main intelligence platform, which is app.sentiment.net. The reason why I personally like looking at it here as well, it's essentially sort of the same data set, but it gives me a few more features. This is available to everybody that has a Sandbase Pro subscription. It allows you to smooth data as much as you want in either direction, so to even reduce or increase the noise of data, and it allows you to look at a sentiment data for a 6-hour, 12-hour, or 24-hour interval. So typically, and we talked about this on a social metric webinar that we did on Wednesday. We did a whole webinar on how to use our social metrics. If you were a Sandbase Pro subscriber, you had access to that webinar. It was sort of a private gathering. So we talked about, somebody asked me in chat, what social source do I usually use for social sentiment data, which is, for me, Twitter is the source that I typically go to. I said that on webinar for two reasons. Number one, Twitter is the data set that I think has the most sort of retail discussions. It makes up the highest sort of share of discussions that we collect on a daily basis, and we collect hundreds and thousands of daily text messages. And number two, our machine learning algorithm for figuring out or labeling these mentions of Bitcoin and other coins as positive or negative has been trained on Twitter's data, right? So that's why I typically like to use Twitter the best, because it, to me, historically has been the most reliable gauge of retail or crowd sentiment. So that's one. Evrim is asking, how can I add the 100 to 10,000 BTC metric in my sentiment chart? So can you really quickly, Brian, just show how to do it? It's very simple, Evrim. You just go to Bitcoin's project page on app.santiment.net, and in the left side menu, you can search for supply. There we go. And you'll see a bunch of metrics. You go down to supply distribution by balance of addresses. So this is at least the metric that we were talking about, which shows the total supply of Bitcoin held by addresses, and you can select which groups of addresses you want. We were looking at addresses holding between 100 to 10,000 BTC, but you can also look at the holdings of retail Bitcoin addresses or mega whales. We also have another metric that you might be interested in, which is the supply distribution by number of addresses. Essentially, what this metric does is it shows you the amount of addresses that are holding a particular amount of Bitcoin. So, like, for example, how many addresses hold between 100 and 1,000 BTC? Is that number of addresses rising or decreasing? So very simple stuff in terms of how to activate these metrics. It's all in the left side menu. Just look for supply distribution. All right. Let's talk about MVRV, and then let's start taking questions, Brian. So I used MVRV as a thumbnail for this video just because I think it's back. It's back, baby. It's back in the so-called danger zone for Bitcoin. So we're currently at, what is that, 16% on my screen, I think, Brian?
Yep, 16.1.
So, okay, let's look at the last 3 years of data for Bitcoin's 30-day MVRV. So I think, generally speaking, I like looking at 30-day MVRV as a overview of where short-term and swing Bitcoin traders are at the moment. So for those that don't know how this metric works, let me break it down as simply as possible. What MVRV tries to do is, using on-chain data, it tries to calculate the average profit or loss of a certain group of holders. So the 30-day MVRV looks at the average profit or average loss of all addresses that have acquired Bitcoin in the previous 30 days, right? So these would be short-term traders, swing traders for Bitcoin. The idea behind this metric is that the higher the MVRV ratio is, the more profits these holders are sitting on, right? And therefore, the more likely it is, or there's an increased risk that they are going to start claiming some of these profits and applying sell-side pressure, and therefore maybe dumping the price in the process. And then on the other side of the aisle, the lower the MVRV ratio is, historically speaking, some on-chain analysts believe this is usually an opportune time to accumulate Bitcoin because it's undervalued per this metric. So typically, I talk about Bitcoin's, historically, Bitcoin's MVRV ratio, the 30-day MVRV ratio, showing a tendency to peak between plus 15 and plus 20%. And so we're now, once again, back in that zone. Now, you will notice, of course, that there have been outliers. There have been periods in time in the past 3 years or more that Bitcoin's 30-day MVRV ratio has, pumped to as high as plus 40%, as it happened back in January. However, that usually does not last for very long. It will last usually between a couple of days to a week tops. And in general, it points to the market being in unsustainable growth. in sort of a massive risk that these holders historically have shown a tendency to start taking profits at these levels, so that they are more likely to now start taking these profits as well. So this is just me saying that yes, we're now in a danger zone. It doesn't mean that this is immediately sort of an end to Bitcoin's bid of 60K and above. It does mean, however, that as we start or as we continue to grow, maybe if we hit 61, 62, maybe if we start reaching the all-time high again, the MVRV ratio is inevitably going to go along the price or rise along the price as well. So it's inevitably going to hit 20% or maybe 25%. At that point, I would be very concerned about the short-term prospects of Bitcoin, because it would suggest that, as history suggests, these are the levels at which short-term Bitcoin holders like to take some profits and move to a risk-off behavior. Take some of their profits, say, okay, I'm done. I'm okay with 15, 20%. This is where I'm comfortable with, especially if we're approaching all-time high, which is obviously a massive resistance level. This might be a cause for some concern. So this is a chart that I would suggest keeping a close eye on, because it's moving into that danger zone. It's not immediately going to end the rally or whatever, but it's something that I harp on quite a bit. And then, Brian, maybe let's also just show the 365-day MVRV ratio to compare it. So this metric is going to be definitely lower, but relatively lower, but it's still going to be overall quite high. The 365-day MVRV ratio is a metric that essentially looks for the average profits of all addresses that have acquired Bitcoin in the past year, in the past 365 days. So these are more long-term holders, right? And as you can see, historically speaking, we're currently at about plus 40%. So long-term or longer-term Bitcoin holders are currently at about plus 40% up on their initial investment on average, which is still pretty high. Obviously, it's nowhere near the sort of bull cycle highs. However, these bull cycle highs are fairly rare. They have occurred several times in the throughout Bitcoin's history, and Bitcoin's 365-day MVRV ratio is still at the moment higher than most of 2019 up until the sort of bullish breakout, and 2020, the first part of 2020. So we are now like moving into that zone where we can no longer say, at the very least, we can no longer say that Bitcoin is undervalued according to the average profits of their holders. They seem to be sitting on quite a lot. Is this the end of the rally? Absolutely doesn't need to mean so, but I think it's now for up to everyone to decide what this means for them. Do they believe that swing traders and long-term Bitcoin holders are gonna start taking profits at these levels or not? Obviously, this is always sort of dependent on the total market context and market conditions. I think at this point I see a lot of bullishness on social media, so it might, at least for the time being, holders might stick around for a little bit longer, but it's definitely sort of a concern, right, Brian, for the short term at least.
It is, yeah. If you're trying to use this kind of metric as a legitimate alpha indication as to where prices are going to go next, view this as essentially a risk measurement with the knowledge that regardless of time frame, whether it be 365-day, 30-day, even 7-day, with that knowledge that regardless of time frame, this metric is going to hover around 0%, and knowing that something like the 365-day metric is plus 41.5% now, the average trader is up 41.5%. Do you want to continue to hold everything with the understanding that it could potentially go up here and there may not be a correction until over plus 100%? Or do you want to play it safe or take some profit with the understanding that on average, through Bitcoin's 12 plus year history, this metric will hover around 0%. Do you want to wait for it to go back there before being fully allocated again? It's entirely up to you, but this is essentially a risk measurement showing how everyone else is doing in the markets. And when they're collectively well over 0%, that means at some point, whether it's now, months from now, or even years from now, this will eventually go back to zero, as it always does.
Right. So, okay, 2 points of business or points of order. Number one, we're going to start taking questions from chat in about 5 minutes. I just want to address a couple of questions that have already popped up in chat in the meantime. So, do you have coins that you would like us to do some very quick analysis on? Let us know in chat, and then we'll sort of pick the most popular coins that people want to see, and we'll do some, impromptu fundamental analysis based on the metrics that are available on our site. As I always say, bonus points if the assets or coins that you want to see live on Ethereum. Why? Well, at the moment, we support on-chain data for Bitcoin, Ethereum, and all Ethereum-based coins, as well as Ripple, Litecoin, and Binance Coin. So these are the coins, which comes up to about 1,200 different cryptocurrencies that we have on-chain data for. So if you would like us to analyze stuff like daily active addresses and whales and exchange metrics, sort of sell-side pressure, we can do that for the coins that I just listed. If you would like us to look at a coin that is not on that list, so maybe Cardano or Polkadot or Solana, things that, or Dogecoin, I don't know. These coins we still have social data for, and we have development activity data for, so we can still go into details and look at stuff that isn't really available anywhere else, but we can't really dive deep into on-chain data. So just a word of caution. Number two thing that I wanted to talk about is Lampol is saying, is it possible to see sell pressure for BTC in exchanges, or what are generally exchange metrics looking like for Bitcoin? So, Brian, we can look at two of them. We can look at the supply of Bitcoin on exchanges, and we can look at exchange flow balance. So, according to our labels, our exchange labels, both of these metrics are sort of in a decline. So that would suggest that generally speaking, the total amount of Bitcoin that is available on known exchange wallets to us and to our labeling team has declined or continued to decline throughout this price increase. So there's been basically a divergence between the price of Bitcoin on the one hand, sort of continuing to rally, and the total amount of Bitcoin that's available on exchanges, which has been actually dropping. And the last couple of days actually have seen another sort of relative dip, or relatively significant dip is what I wanted to say, in the supply of Bitcoin on exchanges, which coincided with that uptick in whale addresses. So it might be connected. I haven't really looked into it that deeply, but in general, this is something that we see quite often. I mean, if you go back to October for both Bitcoin and Ethereum, October 2020, you will see this same sort of exact pattern, which the supply of Bitcoin and Ethereum on exchanges sort of started to drop. And then there was the opposite effect on its price action. So for us, it's a pattern that we see every so often, not just with Bitcoin, but a lot of like low and mid caps as well. The behavior or the idea, the premise that we have here is, what this seems to suggest is that if there's an unchanged demand for a coin, or especially if there's like a rising demand for a coin, and the total amount or the supply of that coin that is available to trade and that is available to buy on exchanges keeps dropping, this might introduce a supply shock, and as a result, or sort of a demand crunch, and as a result, it might lead to a price appreciation. So, yeah, at the moment, according to our data, there doesn't seem to be, at least as far as on-chain data is concerned, we're not tracking still order book data. So we're not like, if there's any type of like rising sell vol of Bitcoin that is already on exchanges, this is not going to show it. But in terms of holders of Bitcoin currently moving their hard-earned Bitcoin to exchanges, we're not seeing any signs of that on-chain. In fact, we're seeing the exact opposite. We're seeing every couple of days, there's a relatively big drop in the exchange flow balance for Bitcoin, which is the net flow, or the total amount of BTC moving to versus the total amount of BTC moving out of exchanges. So it's moving in the favor of Bitcoin's outflows. So more and more Bitcoin is flowing out of exchanges than is going in on a daily basis. So another sort of sign that at least at this particular point in time, we're not seeing massive sell side pressure for BTC on chain. So yeah, just wanted to address that. Okay, Is there a way to access the network unrealized profit loss metric on Santiment? I've searched for it and I can't seem to find it in the left hand side menu. So we have a network realized profit loss metric, which is a different metric that you can sort of look for. You can find it here. Exactly. There is a way that you can search for that you can create a net unrealized profit loss metric. So essentially the way that that metric is calculated, at least as far as I know, is you take the market cap and you you take market cap minus realized cap of a coin, and then you put that in brackets and you divide it by the market cap of the coin, and that comes out to a net unrealized profit or loss. So the way that we can do that, Brian, is we can essentially, that's right, we can combine those two metrics and we can create an expression. So it would be in brackets x1 minus x2 divided by x1. And it essentially is a way to create that metric, even though we don't have it currently in the left side menu. So this is the way that some people calculate the net unrealized profit loss of a coin. Yeah, this is how you can do it. Hope that answers your question. All right, Max. Okay, poll is up. What that means is that we've gotten a bunch of requests for coins that people would like us to look into. If you wanna vote on the top coins that we've received requests for, go to a straw poll and just cast your vote. So we'll look at the coins that get the most votes on that list because they are the most popular in chat. I assume that some people will want us to look into Ethereum. I also assume that some people might want us to look into Shiba Inu, but yeah, I don't know. We'll see. We'll see what people want us to look into. Anyway, Anna says, that's so powerful. How can we access the combined metrics menu? All right, so very simple. This is, I made a video about this, I think 2 weeks ago. If you go to our channel, you'll see a video saying new on Sandbase. And I talked about 3 new features, one of them being this combined metric feature. Essentially what you do is you can click on any 2 metrics in the left side menu. So for example, we take market cap, which is the number 1 sort of parameter for calculating the net unrealized profit loss. And then we go to realized cap and we just select them. So we don't apply them to the chart, right? And so when you select the 2 of them, you will see this in the left, bottom left, you will see this mini menu pop up that say, okay, we've got 2 selected metrics. Would you like to combine them? You click on combine and it opens a window where you can do whatever you want with those 2 metrics. You can subtract, you can divide, you can multiply, you can add more metrics, you can add metrics from different coins. It's a very powerful tool to create new ways to look at the market. Yeah, just this is the way that you can do it. If you want more information, there's a video that I made about 2 weeks ago that goes into some additional examples of how you might want to use this metric to like look at the segment-wide activity. Like, for example, if you want to look at the total activity, network activity of DeFi coins in particular, you can do that with this feature. If you want to look at the total development activity of all NFT projects, for example, you can do that with this metric, and so on and so forth. All right, cool. Max, what's the poll showing? Let's give people what they want. It's been about 40 minutes, so yeah. Okay, all right. Well, let's look at Polkadot. So I told you guys that we don't have currently on-chain data for Polkadot, but I can understand why people want to see it. I mean, I would want to see it as well. It's doing very well for itself. So Brian, let's start with social data for Polkadot. Let's talk about what we're seeing in terms of the total amount of interest in Polkadot as a coin recently. I think Polkadot has been maybe even in our social trends today. Maybe I'm wrong. Overall,
yesterday,
though, yesterday. Okay, good. So overall, what we're seeing is right now, what Brian is showing is social volume and social dominance for Polkadot. So these are 2 metrics that are tied together. Social volume shows the total amount of mentions that we collect about Polkadot specifically on crypto social media every day. And then social dominance shows the percentage of mentions of Polkadot on crypto social media compared to other top 100 coins by market cap. So sort of it compares the total amount of interest in Polkadot compared to everything else, like, well, not everything else, but the most important or most visible coins on crypto social media. So Brian, big spikes in social dominance for Polkadot the last couple of days. What does that mean?
Pretty huge, yes. If you see social dominance spikes, especially when they're correlating with a big price rise like this back here in June, that is indicative of the crowd becoming very aware of that project and thus trying to enter in mostly for FOMO purposes. And when people enter for FOMO purposes, especially in large droves, as we've talked about frequently in previous calls, that tends to be when tops occur. And this one was a very, very evident one. And the reason I'm highlighting this one first is because it correlated almost exactly with the price top. If I really zoomed in here, which I won't do now, you'll see that there are a couple hours between the spike and the actual correction beginning, which is why this is such a nice alpha indicator. If you catch these dominant spikes early enough, you can typically just beat the markets correcting on that price. So with these kind of spikes there, you saw a mini one here. This one was a bit of a false spike. Admittedly, it's not perfect by any means, but this one here, right, the higher it gets, the more confident these dominant spikes are in a correction looming, assuming it's happening with a price rise. And right here was a perfect indication that the crowd was becoming too euphoric, talking about Polkadot at an unprecedented rate compared to its norm. And that is typically the indicator that can show swing traders that it's time to take profit and wait for the crowd to cool off on that asset. We saw just yesterday, as I mentioned, we had our biggest spike in at least the last 6 months. It might have even been longer than that, but I'm just looking at the chart here. This dominant spike was the largest, and so far it's playing out just as expected with the price beginning to retrace. Now, if we see another big spike, sort of like this, I wouldn't call this a big spike just yet. It could still be kind of an awareness spike from yesterday because there's a lot of volatility going on with Polkadot. But let's say Polkadot does this, and then we see another large spike pop out of the blue after a big price drop. That's an indication that suddenly everyone is FUDing, which stands for fear, uncertainty, doubt, toward Polkadot. And that would be a time that the crowd is doing the opposite of FOMOing and becoming overly concerned that the price is going to drop off a cliff even further. And that would be an indication that it is going to move back up. But I'd say 80 to 90% of the time, when you see a dominant spike for an asset that isn't named Bitcoin or Ethereum, it's because of a price surge. And that is the time where the crowd is becoming overly euphoric about it, and you don't want to be in an asset that is associated with rocket emojis and Lambos and buying mansions, as long as you just stay in and have diamond hands and all of those lovely terms.
Right. So I've been just keeping an eye on Polkadot's sentiment while we were talking on graphs.sentiment.net. By the way, I linked to that page in chat if anybody wants to see it. Seems like the average mood towards Polkadot has also started to pick up over the last 24 hours. It's not super high, but it's no longer, it was for a while in sort of a neutral territory. Now it's moving back into a positive territory. So what that means is that slowly but surely we are seeing a sort of bullish interest, or more of a bullish consensus towards Polkadot. So at this point in time, historically speaking, the bullishness towards Polkadot is not like mega high, as Brian is going to show in just a moment. There we go. It's just starting to pick up, but I think these metrics can move very quickly, especially when a coin is in a clear uptrend, as Polkadot currently is. So yeah, keep an eye on it. The last couple of days, when you see these massive spikes in social metrics, especially like social volume and social dominance, obviously sentiment is maybe lagging a little bit behind. It usually suggests that the crowd is just super aware of this rally. So nobody is. It seems like, according to our data at least, nobody is unaware that Polkadot is pumping. So what that means is, on the one hand, a lot of people may now be sort of invested in this idea of Polkadot hitting a new all-time high. And then second of all, it's also probably going to suggest that everybody that wanted to buy into this rally is already aware of it and has already possibly bought into the rally. So there might be less of a buy side pressure moving forward, which can also impact the price of that coin on in a negative way. All right. Do we also want to briefly look into development activity for Polkadot, Brian, just to kind of show what it's been looking like? Obviously, this is not a metric that I think is going to be particularly impactful on a coin's price action in the short term, but I always like to look at it from a value investing perspective. So just to kind of see whether a project like Polkadot continues to push code and continues to work on its project or not. So what Brian is showing is a development activity metric. The way that we calculate this development activity for a project is we looked into their public GitHub repositories, and we collect data from those, and specifically we collect development-related events from those repositories. So we exclude things like comments, forks, starts, etc., in order to sort of reduce the noise and level the playing field. In order to, at the end of the day, create a metric that is trying to show what is the total amount of resources that a project is investing in coding manpower, in development, right? I mean, at the end of the day, if you don't have developers working on your project in crypto, you're probably not planning on pushing new features, adding new solutions and new protocols, and in general, sort of staying true to the roadmap that you have set for your project. So generally speaking, I think even with this latest sort of dip, it could be a million reasons why. We have seen a significant uptick across time in the development activity for Polkadot. It doesn't seem like Polkadot developers care a whole lot about the price. It seems to be moving in the positive direction regardless of market action. And this is what you want to see. It's not probably going to tell you that whether Polkadot is going to break all-time high or not, but as a long-term perspective for a coin, I think it's one of the more interesting indicators, because it suggests that the team believes in this coin and in this project, and it's going to continue to try to make it the best that it is. And at the end of the day, I think that's all you can ask from them. All right, Max, coin number 2. What do people want to see?
We actually have everything else tied for the second spot.
Okay.
And so I think
give us a good ERC20.
Yeah, the asset that we haven't looked at in a while, and which is ERC20, should be Chili's, if I'm not mistaken.
Oh, CHC. Okay. Sure. So I haven't been keeping up with Chili's for the last couple of months, really. I wrote about it maybe 3 or so months ago, when really like the NFT mania started to pick up, and we saw Chili's, Engine, and Decentraland sort of leading the charge in terms of price appreciation for coins that are related to NFTs on Ethereum. And I mean, you can see kind of when it happened, right? So since then, I haven't really been keeping an eye on it. So let's see what the situation with Chili's is right now. Brian is showing the total amount of Chili's moving on a daily basis, which seems to be staying relatively flat. So there isn't sort of any significant uptick in daily activity. What about daily active addresses for Chili's, Brian? Let's just compare it to other coins on Ethereum and see where we are. So we're currently, that's about 750, I believe. Yeah.
Yep.
And you can see that Chili's has a pretty spiky on-chain activity. So I'm not sure whether this is something connected to its price action, or it's something connected to the project itself, maybe some type of airdrops or marketing incentives to interact with the token more viscerally. Generally speaking, though, it's not looking that bad. I mean, a lot of ERC20 coins, especially these sort of mid-cap coins, over the last couple of months since the correction, they've sort of lost a whole lot of their on-chain activity. They've lost, I think, like things like Chainlink and Uniswap. These tokens have, seen quite a reduction in daily use of their tokens. So Chili's seems to be doing relatively well. I think 750 daily active addresses is, considering market conditions, I think it's pretty. I don't want to say impressive, but it's solid. Like, it's not a dead coin or anything.
It's better than average.
Yeah, I think it's better than average. I think that puts it in like probably top 30 coins on Ethereum in terms of on-chain activity, which is good. I obviously would like to see it move into sort of continue to move upwards, this metric, to suggest that, more and more people and addresses and entities are using Chiliz, which would contribute to a network effect for Chiliz, and in general sort of suggest that there's an increased interest and demand for the coin. At the moment, it doesn't seem like we're seeing it, but it seems to have found its niche, and it seems to have found a decent amount of daily users, which, if it continues around 750, I mean, it's a decent number for an ERC20. Let's just leave it at that. Let's look at if there's any sort of signs of elevated sell side pressure for Chiliz, because it seems to be struggling to maintain this upward trajectory. So let's look at daily deposits as well as exchange inflow for Chiliz, just to see where we are. So these two metrics are something that I like to use for ERC20 coins when it comes to trying to figure out whether there's an increase in sell side pressure based on on-chain data. So we're going to start with active deposits. What active deposits are, it's a metric that tracks the total amount of addresses that are being used to move Chiliz to known exchange wallets, right? So the idea being when active deposits are high or rising, this might suggest that more and more people are looking to sell Chiliz, and as a result, especially if that happens during a period of price appreciation, this might suggest that people are starting to take profits, and it might be a period of a correction, like we've seen back in February around that peak, right? Generally speaking, though, it seems like Chiliz's daily active deposits have been fairly there are a couple of upticks every now and again, but nothing that seems to suggest a concerted network-wide effort to sell. The latest spike in active deposits seems like it was around the local bottom. Local bottom, this is something that we often see. So we talked about this on a exchange. I think we need to do another webinar on exchange metrics. We talked about this one on the last webinar on exchange metrics, which was maybe like 6 months ago. Active deposit spikes, they occur both at tops and sometimes at bottoms. The difference, for me at least, the way that I look at these, the reason why, is when daily deposits spike at tops, like while the coin is pumping, it usually suggests that people are taking profits, and it also suggests that there's going to be a hard road for, in this case, like Chiliz bulls, to absorb this rising sell side pressure, because they would need to be okay with buying all these Chiliz at a premium because the coin is pumping, right? A coin is maybe 20-30% up compared to a couple of days or a couple of weeks prior. So there's going to be less of an incentive for people to buy, especially whales. And then when you look at these spikes in active deposits around local bottoms, what that typically suggests, and we've seen this for Ethereum as well, we've seen similar things for Bitcoin, not for its active deposits, but for its other on-chain metrics. What this seems to suggest is there's sort of a network level capitulation. So a lot of addresses moving their Chiliz to exchanges around bottoms suggests that people are scared that we are going to see even further downtrend. And at this point in time, if there's enough people looking to buy the dip, if there's enough addresses and entities that are confident about Chili's future performance, this is where they get in line. I think this is where they start acting and buying up this dip. And as a result, these spike in daily deposits around local bottoms can sometimes actually become a springboard for price recovery. So currently, though, Chiliz's active deposits are fairly low, so it doesn't seem like there's, at this point in time, it doesn't seem like there's a massive sell side pressure. Really, the last real spike was around that local top. Brian, if you zoom into the last, let's say like last month or something. Yeah, let's zoom in and see what happened. Yeah, see that spike in active deposits there, right there. So all of a sudden, as Chiliz started to pump, I mean, it was a very clear spike, a very clear price appreciation. Immediately, we see a general uptick in deposit activity. So a lot of people immediately moving Chiliz to sell because, I mean, this obviously doesn't look like an organic pump for a coin. So I think a lot of people expected that this was going to be a pump and dump, which it seems like it was. So yeah, I mean, when you see this, when you see a something that doesn't look like an organic pump, like a coin moving up, like what is this, like 15-20% in 15 minutes, and then you see a bunch of addresses moving to sell, not necessarily a great signal for its price action and its short-term performance. So yeah, since then, seems like it's doing okay in terms of active deposits. Maybe we can also look at exchange inflow for Chiliz. I mean, it should tell us the same thing, but let's just confirm. Oh, I got a bunch of questions. Sorry. Is there daily active withdrawals metric as well? Yes, there is. And you can actually search for it in the menu. The reason why I don't think it's necessarily good here as an example is the fact that daily active withdrawals, so deposit addresses, right? Their only purpose in life is to move a coin to exchanges. So when you see a spike in deposit addresses, that can only mean one thing, which is people are moving some coins to exchanges. And then you can make a general assumption of what that means. It probably means, especially if this is happening while a coin is pumping, it probably means that some people are looking to sell, right? However, when you see daily active withdrawals, or sort of spike in daily active withdrawals, what that means is that a lot of addresses seem to be withdrawing their coins. What are they doing with those coins is less clear. They could be moving it to another exchange, which would point to arbitrage. They could be just holding it, or there could be some sort of an incentive to, use this coin on other places. So it's more difficult to track what happens with those coins after they've been withdrawn. But yeah, we have that metric. Brian is just showing it right now. So yeah, the reason why I like using daily active deposits more is because its intention is clear, which is people are probably looking to sell. Right. So we saw also, Brian, a spike in exchange inflow right at the top there on October 6th, and then more recently right there at the top on October 14th. So two big spikes in exchange inflow around what seems to be local tops for Chiliz, something that we see quite often. Essentially, exchange inflow spike means a lot of Chiliz, relatively speaking, is currently moving to exchanges. There might be it might be difficult for bulls to immediately absorb this pressure. So something that we see quite often around local tops, you will see these spikes in exchange inflow because it's an on-chain sign that the sell side pressure is coming. All right, do we have any other questions? I think people want to see MATIC, Brian. Okay. I see a bunch of questions for MATIC. Is Chile only associated with soccer teams seasonal? I mean, this is the most, I think, important part of Chiliz, right? The Sorare blockchain and their partnerships with, what is it, like Juventus and Milan and all of these different soccer teams. I have seen, I think this was about 6 months ago, Chiliz has raised, what is it? Was it like $10 million or something to expand to U.S. Pro clubs and leagues? I think they were planning to start with baseball, if I'm not mistaken. So when NFT mania really started and NBA Top Shot became a massive success, like a month later, Chile said, "Yeah, we should expand this." I'm not sure where they are right now with that expansion. We're just here mostly focused on what the behavior of Chile's token can tell us about its potential price action. But yeah, I think currently the main use case is just soccer teams and loyalty points and whatnot. All right, so Brian, we're looking at MATIC, right? It did have a nice little breakout today. We have immediately seen a pretty significant uptick in the amount of unique MATIC moving on the blockchain. Can we figure out where those coins are moving? So let's start with, I think, exchange metrics and see if there's any signs that MATIC, because this also doesn't look like a very organic pump to me. Anytime that I see, it actually reminds me of MATIC back in 2019. You remember that, like what was it, like a 40% bump in a day and then a 40% dump the next day? It's not as high, but still. Yeah, and then immediately, it's basically the same picture that we saw on Chiliz, right? Immediately, a pretty big spike in exchange inflow. So what this seems to suggest is that, generally speaking, there might be some elevated sell side pressure. What about daily deposits, Brian, as well? Can we see if they are spiking as well? Oh yeah,
Oh,
they
yeah.
are. Okay. So yeah, this would probably point to a bunch of people looking to take some profits from MATIC. Yeah, I'm not sure what's happening with MATIC. Why is it pumping like this? It obviously isn't organic. Like it's what? It's like a 10% or 20% pump in 2 hours. That's never gonna be great. I don't know. Can you zoom in, Brian? I think the correction has already started for MATIC. Can you?
Here's the past week.
Yeah. So I mean, this was sort of a pretty obvious sign that we're not gonna continue to pump.
I also saw some interesting whale activity leading up to it for MATIC. Let me see if
Okay.
I can find something really quickly. So right here, we want to go a little higher than 1,000 to 100,000. The price is around one, a little over one, right? So if we look at something like 100,000 and 1 million, and we go to the past year, see how this looks here.
Mm-hmm.
So just before this was October 11th and 12th, we had this big spike in 100,000 to 1 million MATIC addresses, where they went from 1.59% held to 1.88% held. So from a percentage basis, we're talking about that tier adding about 18% to their holdings. That's massive. It was the biggest day I've seen in, I think, the history of MATIC, maybe at least since the first month of exodus of public trading for MATIC. But regardless, this 100,000 to 1 million tier does seem to have a bit of an impact, especially if you combine them. So you can also do this and just go take that off and merge 100,000 all the way to 10 million, hit confirm. And this will kind of just blend them together a bit. And we can see, for the most part, these millionaire holders, I guess I should say 100,000aires all the way to 10 millionaires, should, at least from this perspective, look like they're continuing to accumulate for the most part without much of a blip going on. And that's a good sign long term. From a historical standpoint, especially right here when the big market-wide dip happened and these whale holders continued to just stay put and even grow. That's not happening for a lot of assets, but it is for MATIC right now, and that's generally a good sign if you're looking super long-term. But like we said, if you're looking more shorter midterm, we did see a huge exchange inflow spike and active deposit spike going on.
Yeah, I mean, also I was just checking while we were talking. I was checking MATIC's social metrics. Yeah, not good. So just plot social volume and social dominance for MATIC, and you'll see what I'm talking about. I don't know what's happening with MATIC. I've been sort of keeping my eyes glued to Bitcoin, but this is not looking great. Yeah, all of a sudden, you can zoom in just so we can see more clearly what happens. Yeah, last month is good. Yeah, I mean, yeah. A whole lot of increased interest in MATIC right at the top. Also, I'm just checking MATIC is at the number 4 position on our social trends right now, which is a list that we keep that updates once a day that essentially tracks the top 10 words that are gaining the most social volume on crypto social media relative to their previous 2-week average. So what that essentially tries to do is that list tries to catch emerging narratives, emerging topics and trends on crypto social media. So yeah, MATIC is in like top 5 currently narratives that are sort of starting to pick up social media. Not great. We've done some backtests on this, and when we see a coin, especially sort of move into the top 3 positions on that list, it's usually not a great sign for its price action moving forward. I think we're already seeing this for MATIC. So yeah, I mean, this looks like a very clear topish formation. If you had if you had alerts set up for MATIC, you could have seen this, I think, in real time. So basically, the way if I had MATIC, right, and I was looking for potential signals that we are moving in a dangerous territory, what I would have done is I would set an alert for social dominance. like let me know when MATIC social dominance picks up by, I don't know, 100% or 200%. You could also just set an alert for to let you know when MATIC ends up on social trends, which is I think also a legitimate strategy. Another thing that you could have done is you could have said, let me know when MATIC's daily deposits rise by, I don't know, 100%, 150%. Its exchange inflow as well. All of this would have triggered, yesterday or like 12 hours ago, telling you, look, there seems to be a whole lot of interest and a whole lot of sell side pressure for MATIC. So you might want to chill for the time being. So these metrics are still a little bit inflated. So I wouldn't leave it. I wouldn't sort of put it past MATIC to dump a little bit more. Obviously, I mean, it's nothing. It's nothing to say that MATIC can't recover. I just think at the moment this is clearly not an organic pump. So it's going to need to go through a period of normalization of these metrics and of the price before we can say, okay, it's looking healthy again. So yeah, I don't know. Not financial advice, but some of these metrics are looking a little bit fishy for MATIC right now. Okay. I think that's going to do it for us today. We were actually super on point, just 7 minutes past the hour, and we've already done 3 coins and Bitcoin. Good. Thank you everyone for watching. We'll be back early next week with another video, shorter video. If you would like to sign up for our Same-Base Pro webinars, we will be doing them once a month. Starting with this month, on Wednesday we've done a webinar on social media metrics that we have. So we've talked about an hour about all of these social metrics: volume, dominance, sentiment, and the best ways to use it, and some fringe examples and how to do those as well. So we will be doing these webinars every month for Same-Base Pro subscribers, and we'll be taking feedback and suggestions on which metrics and which ideas or topics to cover next. I've already seen during the social metrics webinar, somebody mentioned that they would like to see more about how you can use our screener to find coins that are maybe undervalued. So this might be a topic to do for next month's webinar. We'll see. If you would like to join those, check out app.santiment.net and create a pro account. Outside of all of the metrics that you get and access to our Same-Base Pro Discord group, as well as sand sheets and a bunch of different features that are not available to free users, you will also get exclusive access to these webinars. So another sort of incentive for people that are maybe on the fence. Max, just flash the discount code for people that are on the fence. So if you are not yet a Same-Base Pro subscriber, get 25% off by typing or entering the code TWIC during checkout. TWIC stands for This Week in Crypto. It is the name of these weekly calls that we do every Friday at 4 p.m. Central Eastern Time. We flash it usually at the end of the stream just to kind of reward people that have stayed until the end of the stream. Thank you all for sticking with us all this like 60, 70 minutes. If you like this type of content, please make sure to like this video and subscribe to our channel. We're trying to grow it, and we're trying to let YouTube know that people like what we're sort of putting out there in the universe. So yeah, would be greatly appreciated. Any type of support. Share this with people that you think might find this content interesting, and we'll talk to you in about, I don't know, 4 or 5 days. Happy 60K. Hope this holds for a while. Keep an eye on the metrics that I said, like social dominance and MVRV for Bitcoin. And yeah, talk to you next week.
Till next time, guys.
Thanks, guys.